All right, so our first question we had from several people actually, which would be the Fibonacci extensions for the Nasdaq, Dow Jones, and S&P 500 over sort of the next 3, 6, or 9 months. If you can take a look at that and also factor in seasonality as well.
Here's a seasonality chart. So this is the S&P 500, but keep in mind all indices pretty much move together. So if the S&P 500 does this, the Dow does it, the Nasdaq does it. I won't cover all three of them with Fibonacci because they're all pretty much going to do the same. I will just jump over to let's go SPY first. There's a couple different time frames. Obviously, um, there's this 30-minute one that I just showed actually in our intro that points to about 4% upside over the next week or two. Or actually, this chart pattern is more so in the next session or two, sorry. If we take a look at the S&P 500, there's a few different, we're starting to get up into this kind of wiggle area where it's starting to get really hard to gauge of where we could draw. Though, just based on this, I would say looking forward. Ashley, you said you wanted to know for the next month or 3, 6, 9 months out. That is far. That means we got to look at big patterns. So maybe we'll drop to the weekly chart and see if we can find something. And Brian, let me know if you see an angle here. But I mean, if we were to actually look at this big chart and go from that point of view, I would probably say this looks like a standout low. We had a
Yeah.
big rally up, big pullback this year for the tariffs. We rallied up and now we're pushing up here. So it is showing 68.40, sorry, 684, which is
That,
really only 3.5, 4% to the
yeah.
upside.
That could be where the Wile E. Coyote moment happens.
Yeah. Well,
How did we
yeah,
get here?
everybody gets up there. They all pile in because that'll probably be a FOMO move. Just as
Uh-huh.
we're actually, seeing the markets lose, probably everybody will pile in and then suddenly the market drops and they'll all be spinning their legs, getting ready for the drop. So the big pattern doesn't show much more upside potential, which is kind of scary. The 30-minute chart actually shows a bigger target upside than the weekly chart, which is to me, that is a pretty big warning sign that we need to be aware of what's going on. In fact, if we take a look at the IWM, IWM is right back up into nosebleed territories. Each time it got up here, we saw a 20% correction. If we take a look at IWC, which most people don't look at, I talk about it occasionally, but this is the micro caps. They've been on a tear. They're getting right up into major tops as well. And I say this because all the major indices and like the micro caps and the small caps are all about to run and slamming into resistance. And the Mag 7s and the big tech have dragged the major indices higher, like the S&P 500, the Nasdaq, making people think it's a strong market. But as Brian said, like literally the market could just take the elevator straight down and there could be quite the plummet coming. And that's what we need to be prepared for, which we are with our strategies. We have stops, we have everything in place. It doesn't really matter what news hits, how fast it hits. You should have orders in place for our stop. And then you're protected, right? So that's the game plan. So the only other one I'm going to cover here is the Dow because we never look at the Dow, which is funny because I only used to day trade the Dow and now I never ever look at it. But let's do a Fibonacci extension on the Dow using the same time frames, the weekly chart, these big patterns. It looks like it's got more upside potential than the S&P 500. It has like two times the upside potential, which is kind of interesting. I'm not sure why, but anyway, it is showing it's definitely got some big volume moving into it. There's money flow. I don't know, Brian, I don't know why the Dow might have this much more or the big
Yeah.
flow, but
I'm not sure either, but like you, it's something a lot of us we just don't pay attention to much as we used to. It's all Nasdaq and S&P. But
yeah, and I think the way the markets like to do things is like pretty much what you least expect is what's going to happen.
yeah, yeah,
And it's funny because here nobody looks at the Dow, or at least I don't, and it actually has more upside potential than the S&P 500. Now we might as well do the Nasdaq, and let's just see where the Nasdaq is based on the same pivot low and this high. It is showing roughly,
it's
holy
close.
crap,
Yeah,
it's already literally the Nasdaq is hitting pretty much resistance here. So technically there's like no more upside on the NASDAQ. The S&P 500 has a little bit. The Dow has the most, and probably nobody's expecting it. The masses are in the Mag 7s, in the NASDAQ, and nobody's touching the Dow, and the Dow's the one probably going to make up all the lost ground or be the one that falls more favorable. So
Yeah.
it's interesting. It's definitely interesting to see those moves.
And if people start getting more nervous about the more speculative, the big cap tech surge and everything, we might see a little rotation into the more conservative, mega cap, stalwart dividend, stalwart stocks
Yeah.
like the Dow. So
Yeah, makes sense.